Las Vegas just crossed a stunning line. The median home price now sits at $480,000. That's nearly $500,000 in the middle of the desert. And here's the part no one wants to admit. This isn't just a soft landing. It's not a gentle correction. This market is teetering on the edge of something much bigger. Prices are stalling. Buyers are vanishing. Investors are eyeing the exits. And beneath the surface, the very foundation of this city's economy is beginning to crack. This isn't just about real estate. It's about a system running on fumes, about people being priced out of their own neighborhoods, and about a desert dream turning into a financial trap. So, what's really happening in Las Vegas? Let's peel back the glitter and look at the raw truth. Let's begin with a simple equation. The median household income in Las Vegas is around $65,000, and yet the median home price is just shy of $480,000. That's a gap of more than 7 times. Historically, financial advisors warned against buying a home more than 3 to 4 times your income. That was the standard. That was the safe zone. 7 times? That's uncharted territory. Or more accurately, the red zone. Let that sink in. For a household earning the average salary, home ownership in Las Vegas is no longer a dream. It's a debt trap. It forces families to take on mortgages they can barely service, especially in a city where living costs are rising faster than wages. And it's not just a few families struggling. This math doesn't work for entire generations. That includes nurses, teachers, paramedics, and casino workers, the very people who keep this city alive. The slowdown isn't loud. It's quiet, creeping, and deadly for sellers. Homes are now taking an average of 55 days to sell. That's 16 days longer than this time last year. In real estate, that kind of shift is a flashing red signal, because when homes sit longer, they stagnate. And stagnation is what happens right before prices fall off a cliff. Meanwhile, over 23% of active listings have cut their asking price. That means nearly 1 in 4 sellers is waving a white flag. And here's the thing. These are public discounts. Behind closed doors, sellers are also offering buyers hidden perks, free appliances, paid closing costs, or cashback concessions. It's like a fire sale disguised as a booming market. But if that's true, why isn't everyone panicking? Because many people still believe the lie that Vegas is different, that its market will always bounce back. But here's the cold truth. The very forces that once made Las Vegas so attractive are now unraveling. For the past few years, Las Vegas rode a wave of migration from California. People cashed out of the Bay Area and Los Angeles and moved east in search of cheaper homes and lower taxes. And for a while, that worked. Vegas was the escape hatch. Home prices soared because demand surged. But now, that surge is reversing. Why? Because Vegas isn't cheap anymore. With prices approaching $500,000 and the cost of living surging, the once obvious trade-off isn't so clear. Add to that the growing number of companies demanding workers return to physical offices. And suddenly, that work-from-anywhere dream is dying. As one relocation specialist recently put it, people moved to Las Vegas thinking they'd get space and savings. Now they're realizing they gave up a lot more than they gained. And when the flow of new buyers slows to a trickle, markets that were built on that demand start to sink. Here's the part most real estate agents won't talk about. Las Vegas is a one-industry town. The city runs on tourism, entertainment, and conventions. But each of those pillars is facing major headwinds. Convention traffic hasn't returned to pre-2020 levels. Tourism is still recovering, especially international visitors. And now, sports betting is legal almost everywhere. The exclusivity is gone. Then there's the Formula One race, the event that was supposed to inject new life into the Vegas economy. But instead of a boom, many locals report it brought weeks of road closures, traffic chaos, and construction nightmares. The economic benefits? Still unclear. And underneath it all is the unspoken crisis: water. Las Vegas depends on Lake Mead, which has hit record low levels. New water restrictions are already rolling out. Each restriction raises costs, limits building, and tightens the squeeze on both households and developers. You can't build homes without water rights. You can't grow a city on hope and PR campaigns when the desert is drying up. Incredibly, 23% of home sales are now going to investors. That's almost 1 in 4 homes being snapped up not by families, but by corporations, hedge funds, and private landlords. These buyers aren't looking to settle down. They're looking to extract profit, and when returns shrink, they sell without hesitation. Already, rents in Las Vegas are plateauing. People can only afford so much. When rent growth slows, but property prices stay sky high, that's when investors bail. And make no mistake, when investors pull back, it happens fast, and it happens without emotion. Just look at what happened in Phoenix or parts of Texas in recent years. 1/4 of investor exits can wipe out months of price gains in a matter of weeks. Not long ago, buyers were racing against each other, bidding wars, appraisal waivers. Offers $50,000 over asking. That was the era of FOMO, fear of missing out. Now, that's been replaced with something more dangerous: fear of overpaying. Once that sentiment shifts, it's almost impossible to reverse. And when buyers are scared, they sit on the sidelines. Sellers panic, prices drop. This exact psychology shift happened in 2007 in Vegas. Everyone swore the market would never crash, that the influx of California money and retirees would keep things strong. Then 2008 hit, and prices dropped over 60% in some neighborhoods. Entire streets went dark. We're not predicting a copy-paste crash, but the warning signs are too familiar to ignore. The first-time buyer, the lifeblood of a healthy market, is nearly gone. In Vegas, their share of home purchases has dropped to historic lows. Why does that matter? Because without new buyers entering at the bottom, no one can move up. Owners can't sell their starter homes. Trade-up buyers get stuck. The chain freezes, and when that chain breaks, it doesn't take long before the entire market slows to a crawl. Even worse? The jobs being added in Las Vegas are overwhelmingly low-paying service jobs: bartenders, hotel staff, gig workers. These aren't the careers that support $500,000 homes. If prices, demand, and water weren't enough, there's a new crisis building quietly: insurance. Las Vegas isn't Florida, but it's not far behind. The desert is getting hotter. 120-degree days are becoming the norm. Fire risk is climbing. Power grids are strained, and insurance companies are starting to pull back. Premiums are rising faster than wages and home values. For many buyers, it's the last straw, another added cost that makes ownership out of reach. Las Vegas housing prices have flown too close to the sun. The income math doesn't work. The demand drivers are stalling. Investors are jittery. And the city's long-term foundations, water, wages, weather, are all under stress. This isn't doom and gloom. It's math. It's physics. It's economics. Whether the correction comes in a slow grind or a sharp crash, one thing is certain: this market cannot hold. So if you're holding real estate in Las Vegas thinking it's still going up, ask yourself one thing: what exactly are you betting on? Because markets don't go up forever. Desert cities don't have unlimited water, and working families cannot pay 7 times their income to buy a basic home. The mirage is fading, the cracks are growing, and the break is coming.